Good evening and welcome to Cycle, the economic review program on MNB World. I'm Anar Gambatar. In this episode, we present the performance of the Mongolian stock exchange and the journey of the Tugruk currency since the beginning of this year, written by our editor, Mr. Robert Rivers. We will delve into the market trends, evaluate the fluctuations of the Mongolian stock exchange top 20 index, and explore the implications for investors, and also other major events that happened in the last few weeks. The Mongolian stock exchange has experienced a relatively stagnant market in the first 6 months of 2023, with the MSCI Top 20 index showing mixed performances throughout the year. Starting the year at 37,565, the index reached its peak on February 28th at 40,386, marking a gain of 7.5%. However, it dropped to its lowest point on May 26 at 35,154, representing a loss of 6.4% from the beginning of the year. As of June 28, the index stood at 37,031, reflecting a loss of 1.42%. The market's performance has been characterized by sideways movements, with periods of gains followed by losses. Notably, the Mongolian stock exchange reached its all-time high on September 10, 2021, during the COVID-19 pandemic, when the index reached 49,250. In 2022, the index experienced a decline of 15.42%, while in 2021, it witnessed a significant gain of 130.28%, reaching as high as 155.37% at its peak. The pandemic restrictions might have played a role in these fluctuations, limiting physical movement but enabling electronic trading. Predicting the market's direction for the rest of the year is challenging, as it remains uncertain whether it will break out of its current range. Shifting focus to the performance of the Tugruk, the Mongolian currency, it started the year against the US dollar at 3,444, following a period of stability between August 2020 and February 2022, within the range of 2,848 to 2,855, the Tugruk began steadily depreciating until it reached its low on March 17, 2023 at 3,528. Notably, underground mining operations at Oyu Tolgoi commenced a few days before its low was reached. As of now, the Tugruk trades at 3,432, showing a slight improvement compared to the start of the year. The currency also traded around this value in mid-December 2022, indicating a gain of nearly 100 Tugruk, or just under 3% since the start of its appreciation. Observing the Tugruk's future value gains throughout the remainder of 2023 will be of interest. Examining the performance of the 5 main banks and bogged banks since their initial public offerings, and despite the market capitalization rising to approximately 11 trillion MNT, the banks have not fared well overall. Only Han Bank and Trade and Development Bank remain above their IPO prices. Gotland Bank experienced the largest decline among the 5 big banks, falling from 1,285 Tugruk to 909.01 Tugruk as of June 28, equating to a decrease of 29.26%. Bogged Bank has performed even worse, dropping from 127 Tugruk to 87.1 Tugruk, signifying a decline of 31.42%. State Bank initially traded above the IPO price, but has now fallen below it. Has Bank has experienced a rapid decline in value within a short period. A follow-up story at the end of 2023 will provide further insight into the second half of the year. Our editor, Robert, has observed that many MSCI investors tend to focus on short-term gains, selling their shares as soon as they see a profit opportunity. In contrast, the writer has been buying shares since April 2019 and has not sold any, maintaining a small profit of approximately 15 to 16% over 4 years of trading. The writer adopts a long-term perspective, planning to hold investments for at least 5 to 10 years. Notably, the MSCI shares themselves have been the best IPO performance, remaining over 40% above their IPO price. The World Export Development Forum 2023 took place in Ulaanbaatar City under the auspices of President Hurso Rohna. The 4-day forum, held from June 26 to 29, focused on addressing the challenges faced by the global trade community, including conflict, climate change, the impact of COVID-19 and rising costs. The event commenced on business consultations and meetings on landlocked developing countries. Mongolia's Foreign Minister Batstik Batmukh provided an overview of the country's economy, trade and infrastructure, as well as the implementation of the Vienna Programme of Action for landlocked developing countries. She expressed the intention to enhance the operation of the international think tank for landlocked developing countries in Ulaanbaatar City. Ms. Rabab Fatima, the United Nations Under-Secretary General, highlighted the importance of the forum in discussing the implementation of the Vienna Programme of Action and its relevance for the upcoming Third United Nations Conference on Landlocked Developing Countries to be held in Kigali, Rwanda. She commended Mongolia for organizing the forum and expressed confidence that it would provide new opportunities for the country as a landlocked nation. The World Export Development Forum brought together over 600 delegates from 70 countries, including small business owners, women entrepreneurs, young innovators, policymakers, and international organizations. The forum featured closed-door business consultations and parallel roundtables on topics such as trade infrastructure, regional connectivity, trade and finance, and inclusive trade facilitation. Business-to-business meetings were held on various sectors including ICT services, natural fibers, and leather, facilitated by a networking platform. During the forum, the She Trades Hub Mongolia was open to empower women entrepreneurs. As the 14th center of the She Trades initiative by the International Trade Center, the hub aims to connect Mongolian businesswomen to international networks and help them enter new markets. Mongolia has a significant focus on increasing women's participation in social and economic development, and the establishment of the hub aligns with these efforts. The She Trades initiative, which has already impacted the lives of 3 million women in 30 countries, aims to connect women entrepreneurs to markets. The initiative has opened regional hubs across Africa, Asia, South America, the Caribbean, and Europe. The She Trades global event provides women entrepreneurs with opportunities to connect with potential buyers, investors, and partners. Previous editions of She Trades Global have generated over $80 million of new businesses for women entrepreneurs, showcasing the positive impact of the initiative. The Power of Siberia 2 gas pipeline has the potential to transform Northeast Asian energy security dynamics, provided Moscow and Beijing agree to its specific terms. With a predicted annual transport capacity of around 50 billion cubic meters of gas, the pipeline's construction will increase the natural gas supply to China and Asia. Economically, Mongolia expects the Power of Siberia 2 to contribute up to $1 billion a year in transit fees to the country's revenue, create employment, facilitate economic diversification, and accelerate its energy transition away from coal. All these developments are necessary conditions for Mongolia's sustainable growth. Mongolia is a developing economy with an average per capita income of just $4,500 and an underemployment rate of more than 12% and an over-dependence on resources extraction. Such an economic windfall will have substantial implications for Mongolia's development. On energy, Mongolia's ability to import natural gas through the Power of Siberia 2 pipeline will help it transition more rapidly away from coal. Mongolia uses coal for 85% of its energy supply and relies on Soviet-era coal-fired combined heat and power plants to service its main cities. Mongolia has initiated talks with the Indian government seeking facilitation in supplying coking coal to domestic steel companies, as mentioned by the Indian Ministry of Steel on June 13th. The source said the representatives of the Mongolian government have informed their Indian counterparts that the several coal washeries will become operational by 2024, and Mongolian authorities are seeking joint venture partners for these washeries with guaranteed offtake conditions. Indian officials pointed out that there are several issues which need to be addressed. First, because coking coal could be imported from the country. It was noted that it's for Indian steel companies to enter supply contracts directly with Mongolian mining agencies, and the Indian government would only act as a facilitator and is not in a position to act as intermediary for any such imports. At the same time, from consultations with domestic steel companies, it has been learned that major challenge from the import of coking coal is Mongolia being a landlocked country. There would be logistical challenges and costs of transporting such import through either Russia or China. That's all for this episode of Cycle. Thanks for joining us. Until we meet again.